Welcome to the Let's Talk BS podcast. I'm Bryan.
And I'm Sofia, and we're coming to you live from the
757.
Good morning, Bryan.
Hey, good morning, Sofia.
How are you doing?
Doing good. We got a guest here today, don't we?
A special guest, very special guest.
Yeah.
I'll let you introduce.
Yeah, I'll introduce him. The guest we have, I've actually mentioned his name or just referenced him a couple of times on the podcast, but it's my buddy Sherman Ledet.
I feel like that was kind of, that
was weak,
yeah,
right?
that was real weak.
Yeah, my buddy Sherman Ledet.
My buddy, you know.
My bad,
This is the world renowned.
Oh, see, look, I'm not good at that. See, that's why you could have took that part over. You know what I'm saying? I'm not good at the intro.
CPA in the 757, Mr. Sherman Ledet.
Yeah.
Welcome to the
Good
podcast.
morning. Thank you for having me.
Absolutely, man. Yeah, definitely. We wanted to have Sherman come on today. Obviously, most folks know it's tax season right now, or beginning to be tax season. People are getting them W-2s in the, in the mail and from their employers and everything. And so we wanted to have a certified professional accountant. Is that what CPA stands for? Or what does that stand for? I don't even know.
Yes.
CPA? Okay. All right, cool. So we wanted to have somebody come by, be able to give you guys some wisdom and some understanding on just some of the different things that have changed from 2023 to 2024, and just in general, just answering any questions that we felt that a lot of folks needed to understand and know. Just have a basic level understanding of what taxes and the different nuances there. So yeah,
absolutely. A lot of people don't really understand some of the differences between a CPA and a regular tax preparer and things like that. So we'll dive deep into that later on in the segment. But you know how we do. What you guys been up to this past week?
Oh, man. For me, was it last weekend? I didn't do much last weekend. My son had a basketball game. He's been playing basketball the last couple of weeks. And it was crazy because the team that he played against was my wife's best friend's son's team.
Oh, that's funny.
So it was pretty cool. We didn't even know it. We showed up and we were like, oh, snap,
That's cool.
Yeah. So it was cool. Now, my wife's best friend, she's very tall and her husband is very tall. And so their son is very tall.
Now
played well. He played well.
I mean,
and
now pretty tall too.
Yeah, but see, the age group that now is playing
definitely gonna be taller than you.
Oh yeah, for sure. That's not saying a lot. Man. That's not saying a lot. But the age group that my son is playing is from 5 to 7. So and he's 5. So he's kind of on the younger, I guess, of the 5 to 7. And her son is 6 years old. He's actually going to be 7 this year. And so they had 4 people, man, that was tall, real tall. Wow. I was joking with, my buddy, her husband, saying they had the double twin towers down there. You know what I'm saying? But they took their first loss this year. Niall did. But the game was pretty decent. I think it was 14-8 was the final score. So they played well. He was telling me that all the other teams they've played, they've been beating them 20-something to 0 and 20-something. So they fought. And then also on my son's team, they got this girl on the team, and she nasty. She's nasty. Yeah. She's really, really good. So she held it down. She scored, I want to say, two of the buckets too this past weekend. So that was pretty cool, kind of seeing that. Outside of that, kind of just spent time with the fam. Watched them playoff football games. My 49ers beat the Packers. So I'm excited about that. We got one more until we get to the Super Bowl. So I'm excited. And also what we also did, I know work-wise, I guess you could say, this past week on, what was it, Tuesday, Sophia?
Yes, Tuesday evening, yep.
Yeah. So Tuesday, we had, what was it called?
So we have a basketball tournament that we do.
Yeah.
We started last year. It's called HARP, Hampton Roads Real Estate Professional Team. And we gave away a donation to the basketball team over at Tallwood High School in Virginia Beach, which is Bryan's old high school.
Yeah.
And so we waited until basketball season came, but then, of course, with the different schedules, Tuesday was the first night that we could all get together to present the check. So that night we all got together and presented the check to the basketball team. So it was pretty cool.
Nice.
And you know what's funny? So we were there, and you brought Niall, and I asked Niall, like, how his game was. And when I tell you he ran it down, he was like, it was 14 to this and this and this and this. Then Bryan was like, get a ball and start dribbling. Then the guy from the crowd was like, oh, he got better handles than you, B. I was like, okay, now I must be doing some things on the court.
Now knows his sport.
Sherman been around him. Sherman seen him. Yeah,
I mean, he don't really. I wouldn't be surprised if Sloan didn't know her sports because
she girly though, man. She's around it, but Niall is like he's like.
But
really
watch when she get older, she gonna know. She gonna be like, yeah.
I wouldn't doubt it.
Yeah. But yeah,
absolutely. What about you? You got kids that play sports?
I have my middle daughter, Zoe, who is actually on track scholarship with West Virginia State.
Oh, nice.
Yeah, so we've been traveling here the last couple of weeks to go see them run. She actually medaled 2 weeks ago, first time in her collegiate career so far.
What does she do?
She's a sprinter, so the 200, the 400, the 60 right now, they run indoor. My oldest also did run track, but she decided to, not. But so that's where their sports comes in. But been doing about the same thing this weekend. Is nothing, just getting ready for tax season.
Yeah.
Because
once that happens, you're like, buckle down, can't do anything.
Everything changes.
Yeah, I'm about to say this guy, man. I've been knowing him for a little over 4 years now. And I know during tax season, bro, this dude is like, he like a ghost.
Yeah.
Like literally, we work out in the morning, and then my man is he's gone. Like he's just gone. Like the normal, because we normally see each other. We live in the same neighborhood, so we'll kick it. In our other buddy Shao. We'll all get together. But during tax season, Sherman's like, hey, I'll see you in April.
Yeah, see you in April. But we will be together this Sunday.
Yeah. We'll be there this Sunday.
49ers.
Yeah.
Oh, okay. You guys are watching the game together?
Yeah,
we have to.
Yeah, got to.
So wait, so are you guys going to the Super Bowl together if they win?
If they win, we will be there.
Okay, so y'all can already have it. You don't drink too much. Y'all go mess up the tickets. Y'all could be flying out on Tuesday.
But we got, a little funny dynamic with that too is that Sherman and myself, we always call each other a brother from another, man, because we got so much in common. Mm-hmm. We think alike. A lot of times you're like, man, I was thinking about that exact same thing, right? Yeah. But our other friend, Shao, he's a big Detroit Lions fan. He's from Detroit. He's from Michigan. I know Sofia's from Michigan as well. Mm-hmm. So, this week, the Detroit Lions are playing the 49ers to go to the Super Bowl.
Oh,
so it's kind of like
Detroit made it to.
They did. Yeah, and they haven't been good.
Listen,
they haven't been good in like 40 years.
Right, because when I lived in Michigan like 15 years ago, I mean, they weren't making it to anything. Correct. I mean, they weren't even winning games at that point.
Correct. So it's like a really big thing for Detroit. I mean, our last couple of games they've had at home, and I mean, it's been really, really big, for them to, be present again and be relevant. But I think this is where they run stops this weekend.
It stops.
Yeah.
It
so we said we got to get together, man. We're gonna have Shal and Sherm come over to the house, watch the game. My son, obviously, he wants to be a part of it too, so he'll be watching it with us as well. I'm finally gonna crack open that Shay Shay. I bought a bottle. I bought a bottle from that Cat Williams interview, man. I was like, you know what? Let me try that. Let me try some of that out, man. The way Cat was
the truth sterile.
Yeah. Everybody. I might need that. Yeah.
You might not need to crack it.
Yeah, right. I might make sure I didn't know who's around me. You know what I'm saying?
I may not want a glass of that.
Yeah. But that's pretty much as far as this week. Like I said, it was pretty cool. As Sofia mentioned, we went back to Tallwood High School and was able to watch the game. They had a really good game. They ended up losing the game, but just to see my son was so excited. To see where his dad played high school basketball at. He got a basketball, was dribbling on the side, and he's really, really into it. Like every day we practice basketball every single day when he comes home from school. Even after they lost this past, I'll tell you this too, which was funny because it reminds me of so much, right? So this past Sunday when they had their game, as I mentioned earlier, and they had their first loss, he was mad, right? Because he hadn't lost yet. You know what I'm saying? So he was mad. So he wanted to come home and practice more.
Yeah,
you know what I mean? So we was at home, and he was like, "Dad," I was like, "All right, we practiced a little." I was like, "Son, I'm gonna go ahead and start watching football." He's like, "No, Dad, no, let's keep practicing. Let's keep practicing." You know what I'm saying? I was like, "All right, cool." So I could see that it hurt that they lost. You know what I mean? So that just drove him to want to get better. I always tell him you got to get better because he always thinks he's the best at everything. And I'm like, hey, sometimes you're gonna fall short. Sometimes you're gonna lose, but you got to continue to put work.
Because boy, my daughter, she's the same way. She thinks that she's the smartest person in the class. So like her top is done. She's done. She don't have to learn more because everybody else needs to catch up to her. I'm like, girl, what is wrong with you?
Yeah. So yeah, that
well,
I'm excited
myself,
about that.
I have 2 sick kids right now, so I haven't been doing anything but nursing and working.
Yeah. It's that sickness is going around. My daughter, she was sick earlier this week too. She missed school on Monday because she wasn't on Sunday. She started to not feel really well. And I think this weather too, man. You know how it always is when it gets warm in the summer, in the wintertime. You know what I mean? One day it's 70 degrees like it is today. The next day it's 30. They talking about it's going to snow.
Yeah.
So I know that also, plays a role in that as well.
Because didn't we get snow warnings like last week?
We did. Yeah. Literally, last week. That's what I'm saying. So it's
last weekend and into the weekend as well.
It was.
So on Monday, my middle child's school called and said, "Hey, come and pick up." And then on Wednesday, my oldest child's school said, "Hey, come and pick up." And then yesterday, my baby boy had behavior issues where he didn't want to read, what is it? The Three Little Bears. What is it? Goldilocks.
Yeah.
He was like, I don't want to read that book. And he just like went crazy, threw a shoe at a teacher. So I had to go up to the school. And it was funny because I got them together real quick and they were like, what the hell? Like, you was just a whole different kid. Then for the rest of the day, I sat there for like 20 minutes just to see how he would do. And for the rest of the day, he had a good day.
Yeah. You had to act right.
He didn't want to read that book. He was like, I'm tired of the Three Little Bears. We need something new. But yeah, he got in trouble though. But,
I'm sure.
Yeah.
But he just needs to get that off his chest.
Yeah. He had a day. We all have them.
Yeah.
We all have bad days. But yeah, let's just say I've been at all 3 kids' schools, outside of norm.
Yeah.
For sure. Yeah. So, what's next?
Yeah, we wanted to go ahead and have my guy Sherm jump in. We had a couple of questions that we wanted to ask, and just so our audience could understand, like we said earlier, the role of an accountant and the role of a tax professional better. So the first question we got is, what is the difference between a CPA and a tax preparer?
Well, a CPA, a certified public accountant, is someone that is dedicated to getting their master's degree. Mm-hmm. And then, of course, you have 4 tests that you have to pass to get your certification. A tax preparer is someone that is more familiar with like H&R Block, the mom and pop stores, tax locations, things of that nature, which is nothing wrong with that at all as well. I actually that's where I came up in the industry. So it's, but, just because you are a CPA or a tax preparer, it doesn't mean that you prepare taxes. There's a lot of CPAs that we actually have that are clients that actually, they may know the law, but they don't prepare taxes. That's just not their area of study or expertise. Tax preparers, you have those individuals that have worked at H&R Block that decide that, hey, they're not making enough at H&R Block, they can go and start their own business. So that's the biggest difference. It's not really, you have to be a CPA to prepare taxes. Tax preparer, it's more of the education and the dedication to get that MBA, that master's degree, and to pass that certification with its 4 exams.
Gotcha. So I had a question then. So I understand what you just said as far as what it takes to be a CPA, but what does it take to be just a tax preparer? Because I feel like, I remember I've had people over the years like that. I'm like, you can prepare taxes? Like what is is there like a baseline qualification?
I had a friend that I went to high school with. He literally just posted this past week, I know for sure so-and-so was in special ed in high school and they prepared taxes. And I was like...
Yeah, what is is there, so I understand the CPA. What is the baseline for
So the difference is anyone, this is an industry just like medical field. Yeah. Taxes are not going anywhere.
Right.
So you're gonna need you're gonna have to pay taxes. So you need to have those prepared.
Yeah.
The IRS has requirements for enrolled agents. If you are a certified auditor, all different requirements. For the IRS to have you listed as a tax professional, you're issued a P10 number. That P10 number and an EFIN number also allows you to be registered with the Internal Revenue Service. That way, the Internal Revenue Service takes that EFIN number that you have to enroll and pay every year to get certified.
Okay.
And that EFIN number is listed on your tax returns for individual that you are preparing.
Okay.
And that registers with the IRS to let them know who all you prepared under that EFIN number.
Okay. Okay.
There's also a requirement based on a certain number that you're going to do as well.
Okay.
So to catapult on that, there's individuals that say they prepare taxes because they have used TurboTax and prepared their return, their cousin's return, their grandmother's return, their mother's return, and now say, okay, I can go make money, do this. I can tell my friends that I prepare taxes.
Yeah.
The unfortunate part about that is we end up getting those individuals that their returns are messed up or are receiving IRS notices that say, you had a business or you had this business and you had $50,000 worth of losses. And the person is like, I don't know what you're talking about. I have no clue what you're saying, but because they didn't pay attention to their return, all they did was paid attention to their refund.
Yeah.
It's important to go to a professional that is actually registered or enrolled with the Internal Revenue Service and that is, has some form of education, has went to some class. You can go to a class. A lot of the individuals that go to H&R Block or have worked for H&R Block or Liberty Tax or something of that nature, you can take a course. And so if you pass this course, you work for them for a period of time, you now are a tax preparer.
Yeah.
And you can go and say that you can prepare taxes. But
now, is there a certain level of I don't know, certain level of I don't want to say trouble, is there something, accountability that you have as a CPA versus a tax preparer?
Well, because the CPA firms, or you won't go to a H&R Block and receive an engagement letter. You two are clients of our firm.
Yep.
And you received an engagement letter that states what your services are that's being done. You won't walk into H&R Block and have to sign that engagement letter.
Yeah.
Yeah.
Okay. You walk in there and they're simply there to prepare your tax return.
Yeah.
Yeah.
They're not certified accountants, enrolled agents. Some of them may be, but those may be the owners.
Yeah.
But the person that is preparing your tax return is simply that, just someone that's inputting data that you're giving them. They're not, again, and this is not everyone, but the difference is being educated in the laws, the tax laws, because they do change the rules and regulations for the federal government and for all states. And that's where the issue usually comes majority of the time, because tax preparers are just receiving the documents you're handing to them and just preparing that, putting it in there. They don't know what else can be done to assist you, or what other questions to ask to help you. Yeah. And that's where the issues or the problems usually come from.
I think that in our industry, there are a lot of changes that happen. I know with mortgage, there's change constantly. One thing that we know about mortgage is that there's always going to be change, right? Yeah. And so same thing with your profession as well. So with that being said, it's a new year.
Yes.
What new changes are coming that can help our people and make them aware so they know to ask the right questions when they go and file their taxes?
Understood. And so, basically, because it's, from 2022 filing to 2023 filing, there's not much that has changed, with the exception of usually they will increase the standard deductions. Yep. And that has occurred, for single, height of household, married, filing jointly. The mileage rate has increased. That was, at 62 cents, now it's 65 cents. Okay. And I wrote a couple of these down so I wouldn't forget as well. there's still, your tax, and I believe this is also another question, so I don't want to jump ahead, but there's still, your tax brackets have changed to adjust for inflation as well. Earned income credit has went up a little bit. Child tax credit is $2,000 per child as well. So it's not really a huge change as far as for individuals. The brackets and the amount of the deductions have increased a little bit, but that happens every year.
Yeah.
Mainly every year. Here recently, for a while it did not. There's a big change as far as businesses that we can kind of speak a little bit more in depth to, but that is the BOI, the Beneficial Ownership Information and Corporate Transparency Act.
Yeah, I've heard about that a lot. I've been seeing that on
social media, on
YouTube. I kind of looked into it a little bit.
What did you find? Because I looked into it too, and I was like digging. I couldn't even find a website to go and register.
It's FinCED, right?
It's FinCED, but I couldn't find like the actual form that you go to complete. I found like FAQs, and stuff like that.
I think it's really as simply, from what I looked at it, man, it's just as simple as you filling out a form. It's almost like putting your, I think it's like they said, your passport or like your ID of some sort of identification. And obviously you can elaborate because I know you probably know obviously more than I do. But it's something like you're pretty much putting your information into the system so they can now keep a record of it of some sort. Is that kind of how it is for the most part?
It is. And what they have done, the FinCEN, Financial Crime Enforcement Network, is trying to, and the government is trying to decrease the possibility of money laundering through businesses. And so this is their way of making sure they have the responsible parties for each entity. Now there are some exemptions, and again, there's a list of exemptions that you don't fall under this category. So not everyone has to complete this. It's a certain size, certain amount of revenue that your business makes. For instance, a church, private industries, or anyone that's a 501c3, they're exempt from doing these. But they're, it's to protect, when you have businesses and you have individuals that are into other things outside of the norm. Someone can come up to you and say, hey, you have a business, I'll give you $50,000 cash towards this money, and you just write me a check from your business. So now when, the government or FinCEN sees this transaction, because after a certain dollar amount, these things are reported, and they see, okay, this $50,000, then they're going to say, okay, I mean, again, are they going to be able to audit everyone? That's impossible, just like the Internal Revenue Service. But they're going to be keeping eyes on things like that to ensure that
red flags is what they call them.
Exactly. that this person is listed as the owner or a principal member. Where you receive this transaction from, kind of thing.
It puts me into the mindset that this all transpired behind COVID and those PPP loans.
Everything is because of those PPP loans.
Because one thing about the government is where they fall short, they will definitely turn it around in the favor of them. Just like, they gave out all that money during the COVID, those COVID relief checks and stuff to the public. And guess what? Now we're paying for it. You get high interest rates. People are having to pay back. They're trying to find individuals who actually committed those crimes. So they're going to figure out a way to get their money back. If nothing else, they're going to figure out a way.
It was a huge issue with the PPP funds because people the government did not have a way to identify if you were truly a business registered, because if you submitted these documents, you got money.
And you can't discriminate. And that's the one thing about the government where that, is known is that it's an issue, because when there's big issues like that, even when it comes to like welfare and government assistance and things like that, they can't discriminate against you, so they can't filter out who's really needing this assistance and who doesn't.
That's tough. I'm about to go put so much stuff out there, but I've been around that a lot, so I understand.
There was a case in Atlanta where they received several $1 million.
Jeez.
And but the part that got him caught was not so much of the amount that he received, because there's several companies that received that amount, but he went and bought like a Lamborghini.
I knew it. I was about to say that.
He went and bought like a $200,000 watch.
Yeah.
So you're putting yourself out there. So that's the purpose of this form. But again, it's not one that has to be completed by everyone. It started, of course, January 1, 2024. And if you created your business in this year, then it needs to be filed before the year, I think by the end of December.
Yeah, the end of this year, yeah.
However, if your business was already created prior to January 1st, 2024, you have until March 2025 to file this form.
Oh, nice.
And that's kind of I appreciate that information right there, Sherman. That kind of brought me into the mindset, I know Sophia could probably speak to this as well, is, when COVID first started and we were, interest rates got really, really low, right? So we were super busy, everybody's trying to buy a house. But, also during COVID, a lot of people lost their jobs, right? And so we would
a lot of people also quit their jobs.
Yeah.
Because the government was paying you more.
Correct. So, I remember vividly that during this time, we had a lot of people that would reach out, to us or the mortgage company, whoever was servicing their loan, and they were asking to go into forbearance. Remember that?
Goodness,
right?
Yes.
Yeah. So
absolutely,
basically, and just like you said, you can't discriminate. If someone says, hey, I can't make my mortgage payment because X, Y, and Z, for the most part, you were able to just not have to make your mortgage payment.
Yep.
But it was crazy because I know, and I had several people reach out to me that were in forbearance with their current mortgage, but also in the same breath trying to buy a new home because the interest rates was really low and it was cheaper money.
And never stopped working, right?
Correct. Or never had an actual change that affected them from not being able to make their mortgage payment.
Yep.
So it's kind of the same principle in the sense where it's like, we had people who were, because it was so easy to be able to just say, hey, I can't make my mortgage payment, really not have to provide very much documentation to support that. You have people saying that in one breath and in the same breath trying to buy a home, and so that's, that we were seeing that as well in our industry, so it's crazy how just like during a traumatic time or during a time where it's, a lot going on, people are always looking for that opportunity, man, try to take advantage of, situations or whatnot. So, yeah.
Yep, absolutely.
Yeah.
You know how it goes.
Absolutely.
All right, so we're in the mortgage business, right? We do loans for first-time home buyers, people who already live in these properties. What are some tax benefits that you get or that a home buyer gets for purchasing?
There's a first-time home buyer, but it's not the same as it previously was, where they give you this credit of $7,500, $8,000, then you pay it back.
Was that under like Obama in office on it? It was like Obama credit. I remember at one time, if I'm not mistaken.
I want to say it was before that.
It was before that.
It was before
I
that.
thought.
It was before that.
Okay.
Where you would get $7,500 to go towards your down payment. You pay back $500.
Gotcha.
The credit is still available, but what happens is, for instance, you can. So let me back up. So if you have a 401k, for instance,
yep,
you can actually take out $10,000 and put towards your home, down payment for your home, and avoid the penalty of withdrawing those funds out earlier.
Correct.
You can take up to $50,000 to the purchase of a home. Of the amount that you have vested in. So you can take, withdraw $10,000 or half of your vested amount up to $50,000. There's you have the energy credits, things of that nature, solar panels. The energy credit is $500. Your solar panels, you can get about 30%. The first time home buyer's actual credit that was there is not something that exists anymore.
Yeah.
That's their way of saying that you still have this first time home buyer's credit. If it's your first time purchasing a home, you're allowed to do that with your 401k.
Gotcha.
So it's not an actual credit, but it's a big portion, because again, if you're taking out $50,000, then you're avoiding an additional $5,000 in taxes.
Yeah.
Or not avoiding, but basically being exempt from that additional $5,000 in taxes. You will still be taxed on the amount that you had withdrawn early. But, you know, it still saves you that $5,000.
And what about just in as far as being a homeowner too? I mean, I know there's advantages as far as things that you could, you know, write off when it comes to like, you know, your tax or for your taxes that you can write off being that you're a homeowner. Like I even know if I did this as well, especially during COVID, a lot of people, you know, because a lot of people had to transition from working somewhere to working at home. Right. So being able to, you know, utilize your home as a workspace. And some of the advantages there, are you able to touch on?
Absolutely.
Yeah.
And also to go back a little bit, I mean, again, with the purchase of a home, you know, now it allows you, you know, when you get to a certain amount of income, you don't have any deductions, especially if it's a W-2. W-2, there's no gray area. And so, you know, clients are asking, okay, what can we do? What can we do to reduce our tax liability? Get an asset, purchase a home. And that's, you know, property taxes, now you get to write off. Mortgage interest, you get to write off. If you paid any points, you know, those things, you guys, of course, you know more than that than I do. But those things become, you know, very advantageous to you when you have a home. As far as for deductions, unfortunately, with the 2018 act when president took over, it was changed. So you were able at one point to complete a form that went on your itemized deductions to decrease to add your taxes. I mean, anything that you did working from home, basically. If you work from home, you know, these were called unreimbursed expenses from your employer. So you were able to deduct your internet, you know, a percentage of your internet,
cell phone,
utilities, cell phone, any supplies you bought by working from home. That is not allowed anymore. You have to have a business to do that. Now, if you have a business, then you are allowed to have that home office reimbursement or that home office deduction. But of course, as a homeowner, the benefit is mainly having those deductions if you've gotten to a point to where your income level is at a point to you're still having a tax liability. You don't have any kids, so you don't have any deductions. And so your standard deduction is now for 2023, I think it went up to 27.
Percent.
Yeah, no, it's $27,000 for 2023. Whereas though 27,900 or something of that nature. So if you have a home that you've purchased that first year, especially in the full year, majority of that is going to be mortgage interest. So you're already, let's say, for the first year, your mortgage interest is $22,000. So you're already almost close to this standard deduction. Now, when you add property taxes in there, being in the state of Virginia or any state where you're having to pay state taxes, you add that in there. You know, now you have $40,000 worth of deductions, itemized deductions, any charitable deductions that now you can use to decrease your tax liability. So that's the advantage of definitely, you know, having a home.
Nice.
That's good stuff. Man. Good stuff.
All right. Let me pull up my handy dandy notebooks. All right.
Jackson, did I answer your question? Was that business owner or was it?
Yeah, you did. Okay. You did answer my question when it comes to that.
So we work with a lot of real estate agents, right? And a lot of them struggle during tax time. A lot of them. There are some that are pretty, you know, they're on point with their finances, but there are quite a few that struggle because that transition is hard when you go from working a W-2 wage earner, right, to now becoming 1099. And so you're responsible for, you know, putting money aside for your taxes and even knowing what to write off. What are some of the things that someone that is self-employed, more specifically like a real estate agent, that they can write off that is not your normal thing that they already know?
Got it. The biggest thing is the difference between you working in a business facility or working from your home. Now, when you work from your home, again, you have the percentages. Everyone knows that. But let's say that you are taking that, you're going to go show a home. Mm-hmm. If you're going to show this home, so change for mileage, you can only deduct mileage or gas, not both. Okay, and it's not you going from your home to go show one property. You have to have a starting period. So from your home to, let's say, here, now from here to wherever you're going to show a home.
Okay.
That's where your mileage starts calculating. If you are not keeping track of that, then the IRS will not, you can't go to the IRS and say, okay, well, I started my mileage in January 1 at 12,000, and in December 31 it was 24,000. So all 12,000 of those is business miles.
Yeah.
Because then the question is, okay, so do you have another personal vehicle?
Mm-hmm.
So anything like that, I mean, again, it's hard to audit all of these things, but that's one of the things that is scrutinized and definitely draws a red flag, because the IRS will, ask for documentation when it comes to mileage. Mm-hmm. Being able to write off your normal, cell phones, supplies, things of that nature. If you have but one of the most important things also how you file. Mm-hmm. As far as for being a single member LLC on a Schedule C versus being a corporation, an S corporation. Okay, it's not so much a lot of times with taxes of what you're filing or what expenses you have. It's also how you're filing it, mm-hmm. because you can file the same income with deductions on your Schedule C and have a tax liability for $10,000, file those same expenses with the same income on an S corp and have a tax liability for $3,000. Mm. Okay.
And why is that different?
Well, it's the self-employment tax.
Yep.
That you are paying additional, your Social Security and Medicare, that you're paying for that 1099 income. Whereas though as an S corporation, you're still required by the Internal Revenue Service to pay this, but it's through a W-2 yep. through your own business. Yep. Now, what this W-2 does, again, everything is still your own money, yep. but what this W-2 does is allow you to now have a deduction from your revenue, and you're still now satisfying the requirements of paying your taxes, along with, as you stated, with the paying the quarterly taxes and things of that nature. You're required by the IRS to pay, and states to pay quarterly taxes, or you will be penalized. You have to have paid at least 90% of what your tax liability is, or you will be penalized by the Internal Revenue Service for failure to pay your entire amount, or failure to pay your tax debt, even once you file your tax return. But you're satisfying that quarterly payment through your W-2, with taxes being withheld there as well.
Gotcha.
So there, for businesses, especially on the real estate side, I can run through a list of things that is already known: the business cards, the meals, all of those things. But there's just so much other things you can do with a S corporation in how you're filing it versus what you're filing.
Understood.
Nice.
That makes sense.
Yeah.
That makes sense.
And that's why it's important to have a CPA.
Yeah.
As opposed to a tax preparer, because I guarantee you,
yeah,
if you went to a tax preparer, they wouldn't be able to tell you that.
Hey, let me speak on that real quick too, Matt. So look, I remember before I met Sherm, right? I used to go get my taxes done. So I had a buddy of mine who I used to work with at Bank of America. And he was like, yo, man, because at first I was having one of my friend's parents do my taxes, right? So that's why I was asking earlier, like, about as far as preparing taxes, like, what is the qualification? Because I know he was a nice guy, but I know that he didn't know very much, because he was asking me stuff. I'm like, bro, you should know that. Like, why are you asking? You know what I mean? Not like personal stuff, but he was just asking me, like, I'm like, hold on, that don't make sense, right? You know what I mean? But I was young, you know what I mean? So I didn't understand. But anyway, one of my old coworkers introduced me to this lady who lived in Richmond. And she used to work for the Department of Taxation in Richmond. So I used to drive all the way up to Richmond and get my taxes done for for like 4 or 5 years straight. And I look back and think about it, like, she really, I think, was just utilizing being that she used to work for the Department of Taxation as like the crutch. because she really won't doing nothing for real. You know what I'm saying?
Yeah.
Like, I remember I would get in the car. I remember Brooke and I, we would drive because Brooke went to VCU, which is in Richmond. So we would like kind of make it like a weekend trip or something, you know what I mean? Or go to DC and come back through or whatever. But I remember like sitting there and she would do them in her home. And I remember even looking at the forms and like, she didn't have her name on anything. It was just like, it was just as if I did it myself.
Absolutely.
You know what I'm saying? And I'm like, but I didn't know. Again, I didn't know what I didn't know. You know what I'm saying? So I'm sitting here just like, and then I was kind of questioning a lot of things or whatever, man. But yeah, this kind of is just crazy. Like as you are speaking and explaining some of these different things, like I'm kind of thinking back at some of the, you know, situations that I had. I'm like, man, that's crazy. Like, you know.
So when it comes to taxes, I have two things that stand out to me. So believe it or not, when I grew up and I first started driving when I was 14, I lived in Michigan, right? And so obviously in Michigan, it snows a lot. And you prepare your taxes during February-ish time frame.
Correct.
So it's snowing like crazy in Michigan, right? The very first time I drove my car, my dad's car, I didn't have a license, was to go prepare his taxes.
Really?
Wow.
The very first time,
That's
yes.
crazy.
And then when I first had a Maya, I was 22. And it was time for me to file with a dependent. I had never experienced that before, right?
Yeah.
So I go to file, and I had a friend who introduced me to a tax preparer that could prepare my taxes. Because prior to that, I was always on my dad's insurance because I was in school. So he always filed for me. I never did anything. So this was the first time that I could file by myself. So I go to this lady. And I really didn't understand the tax return, right? I just looked, like you said, at the refund. And it was, and it was like, I think I got like $11,000. I was like, I get that? 11, that's more money than I made all year.
That earned income credit.
Right. Yeah. So I got the money. 2 years later, this lady had committed crime on a number of people where she was adding in some type of credit that didn't exist, and I had to pay the money back.
Correct. And
I was so pissed off. I was like, and I had already moved to Florida. I'm dealing with this situation with this lady in Michigan, and I'm living in states and states away. So I ended up paying all the money back right away. But I was very I felt like misled. I felt like this Black woman was trying to come after another Black woman and get me in trouble. And I did not like that. So, yes, it's nice. It's nice having a CPA.
and that's the unfortunate part, because, again, it's not so much that they're just trying to come at you, but they see it as an opportunity. And it doesn't matter what is put on your tax return. If you are signing that, the IRS holds you liable. You cannot not pay a debt or pay that liability because you said, well, I didn't know they put this credit on there. And that's the difference with, not all tax preparers are that way either. They're not out to take advantage of you. But there are some that will, because you go to them and, let's be honest, we have individuals that make $40,000 and only had $200 withheld on their federal side, but then they want to know why they're not getting a refund. Yeah. And so you go to these tax preparers and they're like, okay, I'll get you a refund. Let me do some magic. They put a Schedule C on there that has a negative $12,000, so decreasing your income. Now you get this earned income credit. On top of that, they're putting in that your kid, because they were 14, they had education credit, and now you're getting this credit. And so next thing you know, you have this refund of $10,000, $12,000, $13,000 when, in all honesty, you owed. And so the likelihood of the Internal Revenue Service auditing every single one of those is highly unlikely, but you do put yourself out there to be audited and having to pay all that money back. You cannot go back to that tax preparer, that accountant, or anyone and say that I didn't know what they put on my tax return. You signed it.
Yep, that's exactly what they told me. Yeah. I was so upset. They did tell me, however, that I could go after her.
Correct.
Through the courts myself, but the IRS didn't care. They put that on me. I had to pay for that, and I just let it go because I was in a whole nother state. But yeah, I've experienced that. So, and I was 22.
One of the quick thing I didn't want to forget is also with the real estate and with investments and things of that nature is cost segregation as well.
Yeah,
you know,
we talked about that
that's
before.
huge. Making sure that, you know, if you have investment properties and things of that nature, if those are properties that you're going to keep, you know, and you have a business, you know, that is definitely a nice deduction. If you're going to get rid of that property in a short period of time, then I would, you know, advise not to do that.
Yeah, but if you're going to keep it, then the cost segregation is definitely
absolutely.
key. Yeah, I remember learning about that a couple of years ago.
Can you elaborate?
Yeah.
So it's similar to the 179 bonus depreciation. It accelerates the depreciation of the property. So if you have a duplex that there's companies entities that do cost segregation studies, and they will come out, and it's a formula that they use as far as for what they can accelerate in the first year, what they can accelerate in third year, fifth year, 7th year, 10 year. And so typically you are depreciating this over a period of time, 27.5 years. Well, with cost segregation, you're now able to accelerate that and take that deduction, a larger portion of that deduction that first year, a larger portion that third year, and so forth. Again, that's why if you're going to, you know, just have the investment property or the property for building, whatever the case, for a short period of time, that I would not advise to do a cost seg, because now you have to pay that back.
Right.
It has to be added back when you sell it.
Yeah.
But if it's going to be a long-term investment, then absolutely.
So when you sell it, do you also pay that on top of your capital gains?
Well, so
if that applies to you?
If it applies, because what happens is it gets added back. So you have your sale proceeds, you have your basis that's subtracted from there, any repairs, expenses you had, real estate fees, deducted out, and you can and then at that point, if you have sold within that time frame that it is not fully depreciated, you have to add that depreciation back to it.
Yeah, right. It's very similar. I know me and you had talked about it, you know, because obviously I work at Atlantic Bay, and I also am a part of a couple other different businesses, as people have heard on the pod. You know, I build houses, I have rental property and all that, heavy vested in real estate, and you know, with the credit of being able to buy a vehicle. Remember, we kind of talked about that, right? Yeah. So you can buy a vehicle, it's over 6,000 pounds, right?
Correct.
And you could purchase it in your business name, and you could actually utilize, because you can almost, I think it's like a same type of principle, almost like accelerating the depreciation.
Yeah. And being able to.
Exactly, and being able to, you know, have that as a tax write-off, I guess you could say, through your business during that year. And you can have it, I think it said it's spread over 5 years, I guess you can do it. Or
if it's under 6,000 pounds, then you depreciate that over a course of 5 years of your business. Mm-hmm. But if it's over 6,000 pounds, then you're able to accelerate that. 2022 was the last year that you were able to do 100%.
Yeah.
2023, it's 80%,
yeah.
And then you take the other 20% now and depreciate over the next 4 years.
Gotcha. Yeah, so that's key. That's one of the reasons why I got that range. You know what I mean? Yeah.
Nice deduction.
Yeah, nice deduction. That's all I'm gonna say. Nice deduction. Yeah. But yeah. I mean, that's we wanted, like I said, Sherman to stop by today. Be able to give us some more information about taxes, with this being the season, not just your vanilla information, but kind of go into a little bit more detail as far as some of the different nuances that, you know, we get. I mean, even as Sophia and I as mortgage professionals, you know, a lot of times we get folks that are coming to us, you know, obviously entrepreneurship and business ownership has been a very, I would say, hot topic or a hot thing to do. A lot of people are, you know, which is great. I mean, they're going out there, opening their own business and, betting on themselves, as they say, right? So, you know, we want to make sure that you're kind of going about it the right way when it comes to having your taxes and having your finances and things of that in order. Because you can be a business owner and make a lot of money, but if you're not with a good tax professional who's actually helping you when it comes to the accounting aspect of your taxes, I mean, you could really be doing yourself a disservice and really not making or maximizing, you know, what your business is doing and what it's capable of. You know, so we wanted to make sure we had someone come and explain some different things, so we, you know, had a better understanding, and you had a better understanding of exactly what those things are. So
now, Sherman, are you accepting new clients this tax season?
Yes, we are.
Okay.
Yes, we are. And I say that, but yes, we are. We Caldwell CPAs. We have a location here in Virginia Beach. We service clients nationwide. We actually formerly Caldwell CPA, should I say. We're now Compass USA Advisors, a larger firm we merged with that now we have versus the 2 locations. We have 28 firms now.
Oh, wow.
And so it gives us a higher ceiling and more resources for our clients as well.
Absolutely.
Yeah.
Yes.
Yeah.
Well, we do appreciate that tax advice, and I'm pretty sure you're probably going to hear from some people out in the audience that's going to reach out and ask questions.
Sounds good.
Do you have any contact information that you want to provide? Or?
Yes, I can.
Okay.
You can also contact either one of these because they are clients.
Yeah.
But I can be reached at 757. Please hold.
Yep.
I
Absolutely.
apologize.
We understand.
I don't call myself at the office. But my email, you can definitely reach me at email, is sledet, that's SLEDET, at Compass, COMPASS, USA, advisors.com, sledet at Compass, USA, advisors.com. And I will respond to all emails. The number is 757-543-9700.
Perfect. Thank you so much, Sherman.
Absolutely.
So we typically jump right into what we got going on for the weekend. So for me personally, I am going to be getting sick kids in order. What you guys got going on?
So I actually kind of got a busy weekend. My kids are actually out of school today, which I didn't
Mine's
even know.
too.
Yeah, I didn't even know about that. Yeah, my kids are out of school today. So
Yep. Mm-hmm.
Yeah. So today, they want to, we've been doing like on Fridays, pizza and a movie. So we'll probably do that today. It's probably a little bit earlier in the daytime, because of them being out of school. I know they're probably driving crazy right now. So I got that going on today. Tomorrow, got 2 different birthday parties. My son has a birthday party to go to, and my daughter has a birthday party to go to. And then I got tickets to ODU basketball tomorrow. Yeah, so I always try to check out a game, football and basketball throughout the year, especially with my son really, really taking a liking to basketball. I want him to be able to see each of those levels. Like earlier this year, we went to go see our favorite team, the Tar Heels, Carolina, play. So he's able to see the collegiate level. We went to see high school basketball earlier this week. And he likes ODU, me coming from there. So, he wants to check that out. So I got the family tickets, me, Brooke, the kids, my sister, her boyfriend, and my cousin. So I got us all those tickets to check the game out. So It should be a good time. Saturday night. Sunday, my son has a basketball game, so we'll be locked in there. And then Sunday night, man, the fellas going to be over. We watching some football, man. Yeah, I'm trying to see if we got to spend this Las Vegas money in a second. You know what I'm saying? So I might need some more tax write-offs, man. I don't
know. You better go there and meet somebody and set up a business lunch or something.
Right.
Go ahead and pick up a license over there or something.
Yeah. So you got a pretty busy weekend myself. So.
Yeah.
What about you?
Work. Get as much as I can get done today and tomorrow so that I can, be prepared for the games on Sunday. Yeah.
That's when you check out.
Yeah.
Answer.
Sunday,
don't call Sherman on Sunday. Don't email him. He's not responding on Sunday.
Calls, especially during football season. Myself, Bryan, and our buddy Shal, we go at it all day. If we're not even in the same house watching a game, we text and talk.
Text line.
So So looking forward to football Sunday. Yeah. Other than that, just working and. Of course, I'm sure the wife and my youngest, who's still home, they always have eating out plans somewhere. So.
Yeah, I understand that. As a mom, we eat somewhere. If I've been with y'all all day, we ain't cooking too.
Yeah, we going out somewhere.
All right, guys. Well, we appreciate you listening to our podcast. Again, you can follow me at SKB_mortgage.
And Bryan, BRYAN _Royster. And we'll see you next week.
We will see you next week.